Hi everyone, good trade on GJ, but we're not here to talk about GJ today. We are here to talk about gold. The trade we took yesterday that made us 2.3% in profit. You guys wished for me to create a video to explain the trade into details, and obviously I'm gonna do that. So we're gonna go into the replay so I can show you step by step, and so you can see why I took that trade and why everything repeats itself in the market, and how you can do the same basically in the future, you know, because everything more or less repeats itself. Okay, so what happened? Let's start from the higher time frame. Okay, let's start from there. Okay, well, so what happened basically is we're currently on H4. I'm just gonna explain you the setup that I took and the reasons for, and make sure to take notes, make sure to remember stuff. You can watch it. You can watch this video like 1,000 times if you wish, but just pay attention. Okay, so H4, or let's say daily. Let's see if this is going to kick it. Okay, let's do it like, okay, so daily was definitely bullish, but thing is, we have on the daily time frame, we have a ATH, you know, all-time high, which obviously was not meant to be hit so soon. I mean, it's not hit it yet, but definitely it's going to be. We have very fair value gap to the downside. We broke the structure, as you can see. So if we go from this point on, where we had the last bullish, because currently we're in bullish market, price rejected this order block on the daily time frame, push it higher, so we have push, retracement, and every new high that is made broke the structure on the left side. Okay, so we have a push, broke the structure, correction, and the last push, last impulse movement out of this structure on the daily time frame that left behind the daily fair value gap, which obviously is still not mitigated, and I think it's going to happen soon, possible tomorrow, given the fact that currently gold is in the range, building liquidity up. And if you want to go from A to B, you know, you need fuel, you need liquidity, you need to hit some stop losses, right? Okay, anyway, so currently we're bullish on the daily time frame. Let's go on the H4. Can it go quicker? What's lagging? Oh my god. Okay, we're on H4. So the thing is, now if you want to focus on the current situation, so what we had there 2 days ago, okay, what we had there, we had a nice spike down, you know, below the lows that everyone who was buying here at this lows, at those lows, at every rejections basically, they were taken out. Okay, and then once gold pushed higher, created this displacement here, broke the structure, broke the previous high. So the high that made the low, okay, got broken. This is my go-to, okay? And we go to the H1 time frame. Now, on H1 time frame becomes more interesting, more in-depth, more, you know, stuff, more details. And let's go from A to Z. So on the left-hand side, we have fair value gap, which was original target for myself. I closed 2.3%, but original target was this one. And I think it was hit, if I'm not mistaken. So this fair value gap was the target, 5,220-ish as a number. We have a supply area above. We have a bunch of liquidity there sitting in this structure. It was taken to the downside, but it was not taken to the upside. So this was the fuel. Okay, from A to B. Then the last thing I needed was basically push higher to create a breakout structure of that high. This was the order block, and then we can, you know, have reasons from where we're gonna buy it up. Okay, so I'm gonna play chart forward just for you to see how it happened. Okay, we have a first push, first fair value gap is being made. Let's play a bit more. Okay, second push, again, okay, so now we have it. Okay, now we have it. This happened, like, this is the Asian session, as you can see. This is the Asian session. Okay, I was asleep at that time, obviously. Let's go into the London. Okay, another push. So in this case, if we start marking up the charts, so we have this, I'm gonna mark that as an X given, so X means that for myself, obviously, where price took out everything. Okay, so we took out this low, we took this low, and if I mark that up a trend line liquidity, we have this. Okay, so this was taken, fine. Then we have this order block that was rejected, mitigated, also fine, in Asian session, obviously. And then we have a structure that was being created from the London close from the day before into the Asian session, obviously into the London session as well. Okay, and then we push higher. Now, the reason for me to take the trade was basically here, right on the fair value gap. I didn't took it on the order block itself because usually fair value gaps gets taken. And another reason why I didn't took it at the high of the order block is because this candle is very much big, right? So we took a 0.5%, okay? 50% of this candle is down there, but fair value gap is higher. So I moved my entry point to the fair value gap. Stop loss was down there, just below the order block, right there, okay? And obviously the main target was this fair value gap. This was the main target, and 1 to 3%, but I took like a 2.3%, which is fine. Okay, it's amazing. Okay, so let's play it a bit forward. What happened? So we are entering London session. This is where I saw the trade and where I took it, obviously. We entered the London session. London session was a bit of a pause. I can go even lower time frame, you can see. Okay, like that. Even more price action, even more beautiful. And I'm gonna explain you the reasons why I took this trade. What was the how to say bonus confluence? Okay, so we established that we had a daily and H4 was bullish. So you have to understand that first is trend, then everything else. Okay, if you know direction, the trade is going to be easier to find. Okay, and you're gonna have more chances to win it, honestly. So we have direction, H4, a daily are bullish. Then we had a break of structure here. I'm gonna mark that up so you guys can see. So this high was taken out. You had a break of structure, BOS. We have displacement, which is fair value gap. We have order block. This is the whole order block, okay, on a 1 hour time frame. The whole order block. We had this, and lastly, as you can see, the structure that was being made through the Asian and as well London session is liquidity, okay? Liquidity. Why? Because if I drag this from the left to the right side, this acts as a support, okay? And every low, every week you see is liquidity. It's like people going in, buy here, you know, a bunch of buys. And bunch of sells as well. You need to have the opposite liquidity as well. Okay. So with that being said, we had fair value gap, break of structure, order block, liquidity to the downside. Everything else was already taken here. Okay. With this weak to the downside, we have the target, which is basically the H1 fair value gap, and that's kind of it. And the rest is history. Like sniper entry. Playing price forward. So this is the New York Open, as you can see. We open up in New York session. Okay, I was already in, already at break even. Then the fact is, then when you have the stock market open at 9:30 a.m. New York session, EST time, you're gonna see some spikes on the gold as well, on Nasdaq, etc. Those who trade the futures. And usually the first movement is the false movement, and it goes to the opposite to where price will actually go right after. So it's hunting liquidity. This is the first thing. Then the second thing is luring people into the opposite direction where price is actually going to go. Okay, so everyone that saw this rejection here, which is very nice and technical, is very good. I mean, you can short it obviously. But you have to take profit like very fast. Okay, we can see escalation to the downside. Almost took me out. Almost took me out on break even, but it didn't. So I just have it on break even just to be safe. And then right after, when the rejection ended, 50 minutes after, boom, we have a massive rejection here and just price going higher into the TP, to the T, exactly to the T. Okay, but I took it out right here on the top of this section. I took it out. It was 2.3% profit, but it is what it is. At the end of the day, profit is profit, and I hope it helps. Like, everything repeats itself all the time, like literally all the time. Even if I explain you this GJ today that happened. So yesterday I saw, okay, definitely we had a massive impulse movement to the upside. We reached the level 212.00, which is a very big level, and it's a round number zero-ish. So obviously we had to go to the downside. We had to take retracement to the downside, in technically speaking, but we had to find the setup, and the setup did not happen until today, London session. So this was the Asian pushing price down. Okay, this was the Asian session. And then if I go, okay, we rejected this, and if I go back, it was on the 15-minute. So why I took the trade and why I say, okay, because obviously I was waiting for retracement to happen on this level. It did happen, but it did not give the setup for me to take. It's just rejection and V retracement to the upside. It's not a setup, you know. You cannot go in. I mean, you can, but you're gonna gamble if price is actually going to push higher. So I thought, okay, I know GJ because I traded like for 5 years, and I know, okay, GJ usually has the structure twice. So this is the first time, you know. And usually it comes back down, and technically speaking, on the daily and H4, a trend was bearish. We were bearish today on GJ. Okay, we had displacement, fair value gap, we have the order block, we have the price number, which is 211 and 50ish. We have the price number, we have a breakout structure. We didn't test it twice. We were here one time, and that's kind of it. Again, New York session pushed the price down to the T, and went into low, even lower. But it is what it is, 2%. Okay, cha-ching. So guys, I hope it helps. If you have any questions, you can reach out to me anytime. And have a nice trading week. I mean, tomorrow is Friday, so be safe. Okay, chill and come back next week. Bye bye.